traders at Access Bank say that they expect a quiet trading session in the Treasury bills market as investors focus on the 224.5 billion naira auction. Constance Onyia, a Treasury team member at Access Bank, joins me now as for an update on the market activities here in Nigeria. Thank you so much for your time today, Constance. And let's get first your thoughts on the T-bills auction for today.
Okay, thank you for having me. So today we expect the DMO to float an auction. The total volume on offer is 224 billion, and the 1 year has the bulk of the maturity that they are rolling over. So we have a 212 billion on the 364 days on offer today. The last auction, which surprisingly closed at 9.9% at the last auction, coming from the 4% levels where we had them. Today, we expect that this rate as well will close higher, and our range of bid or expectation at this auction is between 11% and 12% for the stop rate, while the 91 and 182 days rate will probably be at 3% and 4% respectively. We do not expect any oversubscription, as market is not so liquid at this particular auction.
All right, then we'll get into the area of liquidity in a bit, but I'd like to first talk about bonds and get what's your take on what's driving sentiments across the curve.
Sorry, please, can you take that again?
Yes, I said I'd like to focus on the bond space and get your thoughts around what's driving sentiments across the curve in the bond space.
Okay, so for the bond space, we've seen demand in the secondary market across the 2025, 2026, and 2028 bonds. And the stop rate for last 2028 auction at the auction closed at 13.99, and then we've seen these rates trade as low as 13.5 in the secondary market. We also saw demand on the 2049 bonds. Yesterday, we saw rates, these bonds trade as low as 15.3% in the secondary market. So for the long end of the curve, there's a bit of demand on that side, while we in the short side, the short end of the curve, there's also demand on that part. The middle trading bonds are relatively quiet at the moment, but we've seen just the demand around the long end and the short end of the curve. So for this week, the outlook will probably still be bullish sentiment in the market, pending when the results of the NTB come out today. If it closes out higher than the last time, we'll probably see some slight bearish trend take up in the market. But currently, as we stand, we have a bullish trend seen in the market. The interbank market is not so liquid. Market opened with about 290 billion, and we've not seen lots of activity. OPR and overnight rates are 10.5 and 10.81 respectively, where it closed yesterday. So we expect market to relatively be a bit calm, apart from people asking for short-tenured bills in the secondary market, and then these bonds that have been in relatively high demand for this week. We don't expect much to happen.
But the DMO also floated two tenors of federal government saving bonds for March. I'd like to get your take on those bonds and how you think the market players are going to interact.
The NTB market, like I mentioned, will probably remain quiet for the rest of the week, and we just expect the results today to come out, seeing that we don't really have liquidity in the system. For the bond auction, we are expecting the calendar to come out for the auction for the month of March, and we don't have that calendar yet. But we expect the same bonds on offer to remain on offer, and then we'll see that the government will probably be borrowing more this time, maybe 75 billion across each of the maturities when we see the calendar printouts.
But looking at the rest of the quarter, what's your take on liquidity?
Liquidity, I mentioned liquidity is about 290 billion now, and going into the week, we expect funding for the NTB auction, and this will probably take out more liquidity from the system, especially if there's an oversubscription and the DMO oversells. We'll probably see them funding more at that auction. Other than that, there are just funding obligations that the bank will just keep to, and we don't expect any inflow other than what is coming in for the week.